After testing investor patience for nearly 3 weeks, Bitcoin has finally crossed above the 20,000 mark to reach fresh all-time highs. The number one cryptocurrency by market value jumped over the key psychological threshold during the early US trading hours, surpassing the previous peak of $19,920, which was recorded on 1st of December. Meanwhile, other prominent cryptocurrencies such as Ethereum, Litecoin, and Ripple are still down from their respective lifetime highs reached nearly 3 years ago. Bitcoin has been on a tear this year. Analysts say it has gotten a boost from big-name investors like Paul Tudor and Stanley Druckenmiller, who moved their own assets into cryptocurrency, while tech firms like Square is also investing heavily in the crypto space. Crypto enthusiasts claim that this rally is unlike the rally in 2017, where Bitcoin plummeted close to $3,000. They claim that this rally is different because this rally is driven by institutional buying rather than retail speculation. Major Wall Street firms like S&P Global have been making a big push in the crypto market data services, breaking above $20,000, which represented a significant hurdle in the mindset of most traders, is entirely new ground for Bitcoin and opens the doors for a climb to maybe $100,000 over the course of 2021, according to some analysts. And while Bitcoin is up over 190% on a year-to-date basis, gold has added just over 22%. More and more in the recent months, Bitcoin is being referred to as digital gold, as Bitcoin has apparently joined the ranks of safe haven assets. These are assets where investors like to place their cash at a time of growing global uncertainties as they flee risky assets like stocks. Early cryptocurrency investors Tyler and Cameron Winklevoss say savvy investors have been a part of Bitcoin's rally this year, separating this rally from previous boom and bust of Bitcoin. They added that these buyers believe that Bitcoin could dethrone gold as a store of value to hedge against inflation. Some of the titans in finance are not convinced, however. Billionaire investor Ray Dalio told Yahoo Finance last month that Bitcoin is not an effective storehold of wealth because it is too volatile. He did admit that Bitcoin has now established itself as a gold-like asset alternative. Some mixed views there. However, one thing to keep in mind is that due to the rising US debt and the rising debt throughout the globe, inflation is likely to rise. During times of inflation, people run towards other assets like gold. However, along with gold, Bitcoin is also getting a boost. Just like gold, there is a limited amount of Bitcoin as well. The total supply of Bitcoin is limited to just 21 million tokens. Bitcoin is also like gold in a sense that it is not issued by a central bank or federal government. JP Morgan Chase CEO Jamie Dimon said that the bank believes in cryptocurrency that is properly regulated and properly backed. On the other hand, Gemini's Tyler said that there is an existential question for the US dollar because of the increased money supply, and the debt will eventually make it implausible for the government to pay its debt. Can you imagine the US government not being able to pay back its debt? That is why a lot of people have fled to Bitcoin, because it is unclear how the dollar gets off this trek of debt and printing, and what it's actually going to be worth in the future, if anything at all. To make things more interesting, Visa backs the first ever credit card to offer Bitcoin rewards. While there are already debit cards by Coinbase and Fold that offer Bitcoin rewards, Visa announced the first ever credit card in partnership with BlockFi. As we are seeing rising usage and acceptance of Bitcoin, it is likely that Bitcoin is not going anywhere. Once a product or platform gets into the public consciousness positively, it takes something significant to shift it back. It might not be the case that Bitcoin will be the top cryptocurrency forever, but for now, it is not going anywhere.